Hello everyone, the topic I'm going to explain you now is relevant to national income, and it is important topic for MCQs as well as long questions, and it is also tested in case studies as well. So this topic contains multiple important terms and I will be explaining them one by one. So starting with the definition of national income. National income is the income of It is the aggregate income of all the residents of a country arising out of economic activities during the period of 1 year. So the term economic activity is really important to consider, and the period of 1 year, again, it is really important because national income is calculated once in a year, it is published once in a year, and we consider only the income which is received from economic activities. Any kind of non-economic activities, illegal activities and unreported incomes are not considered in national income. So national income is the aggregate income of all the residents of country in 1 year, and another definition is it is the aggregate expenditure of on all factors of production by the residents of a country in 1 year. So aggregate expenditure or aggregate income. And the third definition is it is the monetary value of all final goods and services produced in 1 year. So you can see that one thing is really common here, that we are talking about the figures of 1 year. So these are three different definitions. One is considering income, the other one is considering expenditure, and the third one is taking into account the market value of all final goods and services produced in a country in 1 year. So we can basically identify that there are three methods to calculate national income. One is income method, number two is expenditure method, and number three is output method. And these three definitions seem to be like vague if we don't consider this following assumption. There are two assumptions while we are talking about these definitions. The one assumption is whatever is earned is spent out, nothing is saved. It means whatever we earn, we spend out, so income and expenditure will be equal. On the other hand, whatever is produced is sold out, nothing remains unsold. Again, output will be equal to income. Now you can see that if output is equal to income and income is equal to expenditure, then we can write it as income is equal to output is equal to expenditure. So these are two assumptions, and while we take these two assumptions, then above three definitions will be appropriate. Now I'm going to talk about different proxies or different concepts relevant to national income, and these concepts include, number one is gross domestic product, and we denote it as GDP. Net domestic product, we denote it as NDP. Gross national product, GNP, and net national product, NNP. And then is GDP per capita. Per capita means per head, and then nominal versus real GDP. Personal income, disposable personal income. So these are different basically proxies or concepts of national income. I will be explaining them one by one. So since these concepts are huge and they cannot be covered in one lecture, so I will be explaining them in subsequent videos as well. So starting with gross domestic product. Gross domestic product or GDP is defined as it is the monetary value of all output produced within the national boundaries of a country during the period of 1 year. And GDP is calculated using this formula. GDP is equal to C plus I plus G plus X minus M, and C here stands for consumption, I for investment, G for government expenditure or government spending, X is exports, M is imports, and X minus M is collectively known as net exports. So now we can move to the next point, that is net domestic product, and net domestic product is denoted as NDP, and it is the GDP less depreciation of fixed assets. Depreciation is basically wear and tear in the fixed assets. Whenever we use any machinery, technology or tool, its value keeps decreasing, and if we deduct the depreciation from GDP, then we will get net domestic product. And the formula to calculate net domestic product is NDP is equal to GDP minus depreciation. Now before moving to the next topic, I would suggest you to have a look on this question number 6, and stop the video and try to solve it, and afterwards you can again play the video. I will be explaining this question to you. Okay, the question says the information in the table is taken from a country's national income accounts. Different values are given. What is the value of imports? We have to find out the value of imports. We know that national income or GDP is equal to C plus I plus G plus X minus M. If we apply this formula, then we can find the value of imports, which is this one. Just put the value of national income 500 and then plug the value of 200 into consumption, and then plug the value 75 into investment, and this is government spending, which is equal to 150, plus we have export equal to 125 minus imports. We have to find out imports, so we can write minus M. Now if we further solve it, we can add these absolute values 200, 75, 150, 125. If we add them, they become 550 minus M. And now if we move M to the other side of equation, then it will become positive value, and 550 is already on the right hand side. Now if we move 500 to the right hand side of equation, then it will be minus 500. So imports is equal to $50 million. Since all values are in million dollars, so we will choose option C, that is $50 million. And now moving to one more question. Okay, in this question again we will use the formula GDP is equal to C plus I plus G plus X minus M, and again plug these values into formula. National income is equal to 600, consumer spending is equal to 400, investment is 80, government expenditure is 100, plus we have imports 120, so X minus 120. So if we add these absolute values and deduct minus 120, then we will get 460, and we have 600 on left hand side already, and plus exports. Now if we move 460 to the other side of equation, then it will be 600 minus 460, and now the value of export is equal to 600 minus 460 equals to 140. Again these values are in million dollars, you can see here, so $140 million will be the answer. So this is it for today, and I will be explaining next in next lesson, inshallah.